Hello everyone, welcome to this trade breakdown on EU. In today's breakdown, I'm going to walk you through this trade that I executed yesterday on Tuesday. I'll break down the entire thought process, the rationale behind this setup. I'll explain exactly why I took this trade, what was the drawn liquidity, exactly how I defined my directional bias, and what the market context looked like, and the narrative that supported it. Right? I'm going to go through everything from the higher time frame reasoning all the way down to the execution to the lower time frame execution. And by the end of this breakdown, you'll know exactly how this setup came together and why this setup was a valid trade for me to take. Now, if you watched the outlook that I posted yesterday inside TC, then you'll remember that I was very clear about my expectation on Tuesday, right? I outlined that I was anticipating a short-term retracement from here before any continuation higher toward the long-term drawn liquidity. And specifically, I outlined that I'm expecting price to fill internal range liquidity first of all. And for that particular reason, my short-term drawn liquidity going into the first half of the day and during the London Open session was bearish and I had a directional bias, right? My directional bias was bearish not because I thought that the trend had reversed or I'm expecting lower prices all the way down here. No, that wasn't the logic. My directional bias was bearish during the first half of the day because I know that price needed to rebalance internal range liquidity and fill internal range liquidity before it could continue to expand higher towards the long-term drawn liquidity that I had outlined in the weekly outlook, right? That was the core logic behind my directional bias and behind how I figured out and determined my short-term drawn liquidity, right? Let me break this down again. Now, my drawn liquidity on Tuesday was this specific daily fair value gap, and I expected price for the first half of the day to have a short-term retracement profile to come down lower to fill this fair value gap, to fill this internal range equity, to fill this IRL before it does anything further. And the reason why I had so much conviction in this idea is because, first of all, we had a clean SMT divergence with GU. What had happened is that GU had taken out these highs, whereas EU had failed to do so. And that had led to this non-symmetry and this divergence between these two correlated assets. And because of this divergence, it gave me enough conviction and enough confluence that now a short-term retracement profile is more likely than an immediate expansion higher, right? Because of this, my short-term drawn liquidity was lower and my directional bias was bearish, right? So with that, I had a clear bias and a clear drawn liquidity. The next thing that I needed after this was a proper market context, right? And now let me break down the market context that I had for this particular trade. First of all, let me remove this line. First of all, what you can see right here is that I had this valid 4-hour order block, right? Now some of you might be wondering, how is this an order block? Now let me explain. This exact candle, you can see that on EU it didn't purge liquidity itself, right? But on GU, the correlated asset, this exact candle did took out a key high and purged liquidity, which means that we had a divergence between EU and GU, right? And because of this divergence, even though EU didn't purge any liquidity itself, but on the corresponding asset, on the correlated asset, GU did. So technically, this becomes a valid order block for us on EU as well. And what's the reason for it? The reason for it is correlated price action. That's why we do this cross analysis between correlated assets. So we can actually get the whole story and not just the half one, right? Because I had done my cross analysis and because I knew that this exact candle had purged liquidity on the correlated asset, right? That's why I took this 4-hour candle as a valid and a key order block and a key level, right? And to build a market context for this trade, this was the first key metric or key factor, this 4-hour order block. Alongside that, I marked this 9 p.m. candle as my candle range, right? This was my CRT. So at this point, I had a valid high time frame key level in the form of this 4-hour order block. I had a defined in a clean CRT and a clean short-term drawn liquidity and a bearish directional bias. Now all I needed was for price to test these levels, purge liquidity at a key time, and then form a confirmational entry on the lower time frame, and then I had to then execute this trade, right? And the key word here is that all of this needed to happen at a key time, right? Now let me show you exactly how I executed the entry on the 15-minute time frame and exactly what happened there. Looking at this 15-minute time frame, first of all, you can see that during the 1 a.m. candle or the 1 a.m. hour, we did got a purge of the CRT and we tested the higher time frame key level, the higher time frame 4-hour order block. But for me, that wasn't a valid signal or that wasn't a valid entry trigger. And you know why? Because first of all, the major factor here is that it didn't happen at a key time. This purge and this testing of this key level didn't happen at a key time. It happened outside of a key time. And that was one of the major factors that led me to not considering this purge or this testing of this key level as a valid entry trigger or a valid confluence. The second factor is that this purge was weak. You can see it yourself right here, right? It lacked a follow through. And the third factor is that there was no real engulfing confirmation, and you can see it yourself. And then last but not least, there was no supporting SMT divergence with either DXY or GU. And because of all of these major factors, I didn't consider this entry trigger as valid, and I didn't took any setup right here, right? Because I knew that I needed a stronger confluence and then I needed a stronger confirmation before executing a trade. And most importantly, I needed all of this to happen at a key time, right? So what I did is I waited. And then during the London Open session at 4 a.m., everything aligned. First of all, we purged the candle range during the London Open session, which is a key time. We purged the candle range. We tested the 4-hour order block, the 4-hour high time frame key level. And most importantly, along with all of those things, we had a major SMT divergence with DXY. DXY took out this corresponding high, which is obviously a low on DXY. It took out this low, right? Whereas EU had failed to take out this corresponding high, and it led to this non-symmetry. And because of this non-symmetry, it confirmed to me that now we can have a potential reversal from here and a potential higher time frame short-term retracement so that we could fill the 4-hour internal range liquidity or the daily fair value gap, right? The timing here was perfect, right? We had key time here, we had a key structure and a form of purging the candle range, having this SMT divergence, and once I saw all of that, I then waited for my order block confirmation entry to form. And right here you can see that once this candle got engulfed and price closed below it, I then took this candle as my order block, took an entry right here with my stop loss above the order block, and I targeted the internal range liquidity, which gave me a clean 3-hour setup. That's the entire breakdown of the trade, right? And then if we go to the 4-hour time frame, let me remove all of this. And then what you can see right here is that after we fill this internal range liquidity, just like I had outlined and just like I had anticipated and expected, what price did is price then reversed from here and expanded higher, right? That's the whole trade breakdown.